Good day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Njoku, and today I'll be taking you on this market breakdown for the time period of 18th to the 22nd of March. Okay, so we're going to wait for others to join us. And as we wait, if you have any questions, drop it on the comment sections and it will be answered. If it's your first time, subscribe to our channel, click the notification bell icon, and smash that like button to keep this channel running, and also to be able to help YouTube algorithm to get this video to a lot of traders who would need this information. Okay, so in the next 60 seconds, I'll be sharing my screen. We'll be going through the technical aspects of the charts, major currency pairs like Euro USD, AUD USD, GBP USD, USD CHF, DXY, the strength of dollar. We'll be also checking out XAUUSD, which is gold, and oil. Then to finish up, we're going to wrap up with Bitcoin. We'll also be checking out sentiment, okay, what other market participants think about the current situations of these pairs and the direction they anticipate these pairs to go towards. Excuse me. Okay, all right, back. Okay, so with that said, I'll share my screen right now. Okay, I just shared my screen. If you can see my screen, kindly comment Y on the comment section. Comment Y on the comment section, which signifies yes. Okay, so like I told you guys earlier, this is for the time period of March 18th to 22nd March. We're going through the technical aspects. After we go through the technical aspects, we'll break down the fundamental aspects and also the sentimental aspects of this particular chart. Okay, I can see that you can see my screen. Thank you for being on this call, Azoro Daniel. So to move forward, we're currently looking at DXY. We're currently looking at DXY, which is the strength of dollar. And for DXY, we are currently in an up move. Okay, and this up move, which last week we told you guys that DXY is going to move up, giving us an impulsive move correction, and then another impulsive move to the upside. So from this point right now, DXY is in between a resistance and a support. It is in between a ceiling and a floor. It is in between supply and demand. So based on probability, what goes up must come down. What goes up must come down. What goes up must come down. So I have a bias of a corrective structure to the downside, minimum to 103 psychological level for the strength of dollar. Okay, and when it comes into this demand level and it gives me structure, I can anticipate a buy from over here to the upside. But watch out, the market maker knows that a lot of traders will be watching out for sales of the DXY from this level. And one way the market maker makes money is to drive it the wrong direction. So if the market maker knows that a lot of market participants will be expecting sales on DXY from this level, and the the total market participants has invested about $60 billion to drive this market to the downside. The market maker can easily drive this market to the upside with $50 billion and get into this resistance level and profit $10 billion. That's the way the market maker makes money, by driving you to the wrong direction. So the market moving up back into this resistance level and this supply level, it's still a high chance that this could happen. Okay, there is still chances that this could happen because the market is currently in between a resistance and a support, a ceiling and a floor. But based on this corrective, after this impulsive wave, a corrective structure needs to play out. I'm looking out for this sell structure. It's 80% chance. Then this move to the upside is about 40 to 50% probability chance. Okay, so no matter what, we will apply proper risk management and follow the chart accordingly. With that said, let's dive down to Euro USD. Euro USD is 80% correlated with DXY. So if we're anticipating DXY to go to the downside, we are going to anticipate Euro USD to go to the upside. It's loading. Okay, Euro USD is loading. I clicked on it. Fantastic. So this is the chart, Euro USD chart, and on one glance you can see that the market is trending to the upside. The market is trending to the upside from this point. From this point, the market is trending to the upside. Trending to USD towards to have a corrective structure and sell. It had an impulse correction and another impulse. Okay. So from this level for Euro USD, because it is at a demand level, I'm anticipating buy setups for Euro USD. Okay, because we're anticipating a sell setup for DXY. So I'm anticipating a buy setup for Euro USD. Is that understood? Fantastic. So in that case, we'll be anticipating that Euro USD will move to the upside from this current demand level. From the point of view on the chart for Euro USD, it is currently a demand level, but on DXY chart, it is neither on a demand level or a supply level. It is in between. That is why the probability of the market still going more down on Euro USD, there are chances of the market still going more down into this demand level. But since we currently see that Euro USD is inside a current demand level, for me, I'll be looking for a buy setup to complete that corrective structure which we saw on DXY to the downside. Let's see what sentiment is saying for Euro USD. What other market participants think. Okay, so based on sentiment, we can see Euro USD, which is the most popular traded pair. It has 39% of traders trading it. We have sentiment saying short is 43%, long is 57%. So there's a lot of trades already for the longs for Euro USD. Short is 43%, long is 57%. So we still stand accurate based on our sentiment. Euro USD to move to the upside. I already called out the signals in our Telegram channel. In our Telegram channel, we have a community of traders who have like minds to be able to make profit together. You can join. The link is going to be on the description. Just go to that description and click on the Telegram channel. Okay. With that said, the next on the list is going to be gold. If you have any questions, don't hesitate to drop a comment. And if you have any feedback you'd like to share with us, don't hesitate to drop it on the comment section. For gold, the structure I see is quite different. For gold, I see gold, it has respected this psychological level of $2,185 per ounce. Okay, $2,185. So from this level now, we saw a break. After this break, this is more like an impulse. It had the correction back into this particular order block. Okay, there was another move to that side, but it didn't take this low. So for gold, back into this resistance level and grabbing these orders. I see gold going back into this level and grabbing these orders here. Okay, and having more push to the downside. Having more push to the downside. So it's going to have a corrective structure to the upside to grab some trades. Okay, at this resistance level, this supply level, and then we're going to see more sells on gold. Let's see what sentiment is saying for gold. XAUUSD, XAUUSD, XAUUSD. Okay, for sentiment, we have 63% is short, 37% is long. So sentiment is saying that gold will sell. So like I told you guys, I'm not willing to sell gold at this current level because it is oversold at this point. I want you to come and give me what a discount price where I can sell higher so that when it drops, we'll be able to make good profit. Okay, so the next on the list is AUD USD. AUD USD. AUD is a major currency just like Euro USD. And since we anticipate a buy on Euro USD, I also anticipate a buy on AUD USD. So the chart is currently loading. So we'll take a good look at the chart. Okay, so for AUD the structure is really different. It's more like DXY, what I see on DXY. We don't have a current demand level at we're not having demand level, we have a supply level above here. So at this point where the market is for AUD, there's no demand level. This is where the demand level is, just like we saw on DXY. It is in between a demand and a supply. So for AUD, if it moves back into this supply level, I will have more confidence to sell the market to the downside for AUD USD. But for right now, I'm anticipating what a move to the upside, which is going to be more of a corrective structure of this massive push to the downside. Okay, so this move to the upside is more of a corrective structure where we have demand level. When it gets into this demand level, then we'll be watching out and monitoring to see the next move on AUD USD. If it gives us a sell setup, then we can be selling it down to this demand level. Okay, guys, that's what I see for AUD USD. The next on the list is, before we go, let's check out sentiment on AUD USD. Let's check out sentiment on AUD USD. Okay, for AUD USD under sentiment, we have 70% long and 30% short. Okay, so that's why we're anticipating the push to the upside. When we have 70% of the total market that is trading it long and 30% short. So in that situation, we'll be looking for the buy setups for AUD USD, which is to drive the 70% long. We then look for the sells. Okay. So with that said, the next on the list is USD CHF. USD CHF, which is major currency. We want to finish up with major currencies first. For USD CHF, it's quite similar with Euro USD, and the structure in USD CHF is quite simple, like Euro USD, unlike AUD, which has a complex structure. So for USD CHF, we are currently inside a supply level, okay, created from this candle, with the last blue candle before this drop. So over here now, it has come back into the supply level and has started creating one for us bearish structure. Okay, bearish structure on the smaller time frame. So as the market opens up, we're anticipating sells on USD CHF down into this demand level. Okay, where we have more pending orders lying for the buy setups. Okay, so this is what I see. There are orders lying here for buys for USD CHF. So I'm anticipating a sell from this current zone, this supply level. Okay, for USD CHF. Okay, so let's check out USD CHF and see what sentiment is saying for USD CHF. USD CHF. Okay, for USCHF, we have short is 61% and long is 39%. So we are going in the same direction with sentiment. Okay, 61% short. Okay, so that's why currently at this supply level, we'll be looking out for our sell positions down to this demand level. Okay, so the next measure on the list is GBP USD. Okay, for GPUSD, we don't have any complex structure and it is quite juicy, more like the USD CHF. It is currently inside a demand level, okay? Just like Euro USD, we have a demand level. So for me, demand level, now I'm looking out for buy structures for GPUSD. And as soon as the market gives us the buy structure, we'll be looking out for what more push up to the upside, okay? So that's what I see for GPUSD. Let's see what sentiment thinks of GBP/USD. Okay, so where is GBP/USD? This is GBP/USD, and sentiment thinks long is 55%, short is 45%. So we are in the same direction with sentiment. Okay, so currently you see that GBP had a very massive impulsive wave from this low to this high, and currently it is at a what? It is between the 62 to 50% Fibonacci retracement point, and from here we can anticipate GBP to start moving to the upside. It could even break this previous high, because I see what a supply level which market has not fulfilled efficiency above. This is what I see for GPUSD. Okay, way longer push, but from here we'll be applying our proper risk management and taking the sizable positions. Okay, so the next is US oil. US oil is an example of our forecast playing out as planned. Okay, currently we don't do before and after, but most of our forecast we follow it week to week. If you follow us on our Telegram and we place the trades based on our forecast, we're always profitable. So for US oil, this was our forecast for last week. We anticipated that US oil, this was a demand level. US oil should come and tap into this, then create some kind of structure and move to the upside. And that's exactly what US oil did. It came down to this demand level. After it came back to the demand level, it created what? And a bullish structure. As soon as the bullish structure was created, taking out this previous high, okay, we should know that once the market came back into this level, we should be anticipating for a push to the upside for US oil. So, and that's exactly what US oil did. So in that case, now US oil is inside a supply level, okay, more of an area of resistance. And when the market was currently at this level, I told you guys we're heading to $80 per barrel. Okay, and when the market was also at on Monday, I told you we're heading to $81 per barrel, and US oil completed $81 per barrel. Okay, so now from here, now I'm splitting sales for US oil, but it's more like a corrective structure. Because if you look back, this is a bigger what up trend. Okay, so I'm splitting for a corrective structure for US oil. If you're able to manage to learn the risk management of US oil, you can be making juicy profits with our sponsor broker, Hot Forex. So with that said, let's see the next pair. The next pair on list is BTC USDT. BTC USDT. Terrific. So for BTC USDT on Monday, we told you guys that BTC USDT on Sunday last week, I meant on Sunday last week, that was on the 10th of at this area is going to move up, and that's what BTC USD to move up to the level of $73,000 per Bitcoin, and then from there we told you that BTC USD is going to drop, and our psychological level where we anticipate BTC USD to come down to is about $57,000 per Bitcoin. Okay, which is a floor, more like a support level for Bitcoin. Okay, so from this level now, I'm expecting Bitcoin to move to the upside and have one more impulsive drop to the downside. I see it coming down to the psychological level of 57,000. Okay, before we continue any push to the upside to clear this high zone. And I told you guys this market can get to $57,000 probably by next month, April or mid-May. Okay, remember next month is the official halving, April. So with that said, we're done with the sentiments. Before we dive into the fundamental aspects of this market breakdown, I would like to share some opportunity with you. Over here, we have our copy trading account, which is created on Hot Forex (HFM), which is one of our sponsor broker. And I've been with HFM since 2019, and I've been trading, making money from HFM, and living a very good life, earning in dollar. So this year, I dedicated to build a portfolio, to build a track record on HFM. So I started a copy trading account with $100, and so far we're up 3.46% this month of March. Okay, so I want to build this portfolio steady and slowly. Okay, making 10% every month could be my target. I'm not really in a hurry to make quick bucks from this particular account, because my major objective is for me to be able to build a sustainable track record so that I can be able to attract foreign investors to connect their account to my own account and make profit while I make profit on my own account. So if you are interested to know more about this, the link is going to be on the description. Go down to the description. You can schedule a Zoom meeting with me, reach out to me on WhatsApp. You can also watch a YouTube video. The link to the YouTube video is on the description. It's going to show you how you can be able to register with HFM. It's going to show you how you're going to verify your account on HFM. It's going to show you how you can fund your HFM account, and it's going to show you how you can be able to connect your HFM account to my own account. Okay, so currently we're up 3.46% on this account. Okay, and this account was started on February 18th, but we placed our first trades on February 28th after spotting a very good trading opportunity in the market. So we don't trade mainly quantity, we trade mainly quality trade setups so that we can be able to bring suitable portfolio gains to our investors. Thank you. So with that said, dive down to the description, get the link. You can schedule a meeting with me and I will guide you one-on-one to be able to achieve this growth. With that said, let's move to the next segment, which has to do with the fundamental. To be honest with you, I love this week we're going into. It is a very volatile week. Starting this week on Monday, March 18, 2024, we have by 9 a.m. Euro CPI, okay, for Austria. And if we see a figure higher than 123.2, this could be the trigger we needed to see Euro USD move to the upside. Currently, consensus is higher than previous, which is more of a positive angle for us, which is more of a positive view and a promising view that we could see actual higher than consensus. Then by 11 o'clock for Euro Central, we have CPI as well. And currently, we see consensus is 124.4, which is higher than 123.6, which is terrific. If we're able to see a figure higher than 124.4, it is excellent to see more strength and buy positions opened up on Euro USD. So watching out for Euro USD by 9 o'clock West African time tomorrow. Then on Tuesday, we have early Asian session, Bank of Japan interest rate decision, which is a very, very important news to watch out for, because we have been getting a lot of sentiments that the Bank of Japan is going to be going off from the negative interest rates. Since 2007, Bank of Japan has had their interest rate at minus 0.1%. And this year, 2024, we're anticipating to see them increase it to about 0% and gradually to about 0.5% or 5 basis points. Okay, so this is currently what we see. And let's see if this is actually true. The sentiment was that they're going to go out from negative interest rates to 0% interest rates. Let's see how that plays out. Then as well, Asian session, we have Bank of Australia interest rate decision, which is about 4.35%, and consensus is 4.35%. Remember, 2 weeks ago, we had Euro interest rate decisions, and their interest rate was unchanged. I repeat, their interest rate was unchanged. And after that happened, Euro fell against the dollar and against other pairs, okay? So if we see this interest rate to be unchanged for Australia, we can anticipate a sell setup for the Australian pair. That was why I told you on that Australian chart, it is complex because it was not on a demand level, neither was it on a supply level. It was just positioned the same way DXY was positioned. So this could be one of the results why we have a complex structure on AUD USD. So the next on the list is Euro Central Bank are speaking by 9:30 London session. Then we have economic sentiment for Germany, 11 a.m. West African time on Tuesday. Inflation rate year over year for Canada. Then CPI team mean. This is a derivative of inflation year over year, and CPI medium is a derivative of inflation rate year over year. So be watching out for inflation rate year over year. If we have a figure higher than 3.1, it is good for the Canadian dollar, and it will give you strength to be bullish. Then we have building permits for London as well by 1:30 New York session. And if we have a building permit figure higher than 1.5 million, it is good for the United States dollar. But if we have a figure lower than 1.5 million, it's going to be bad for the United States dollar. Then on Wednesday, we have Great Britain pound inflation rate year over year. Okay. And if we have a figure higher than 3.6%, it's going to be good for GBP. Remember, Great Britain Great Britain or London went into a recession. That should be about 4 weeks ago. They declared recession last month. Okay, I cannot be specific based on week, but it was last month. And if they are in a recession, which means that there have been increase in inflation, okay, for a consecutive period of time, probably for the last quarter, that's when you consider we're in a recession. When inflation has been increasing for a consecutive period of months, okay, you can then declare recession. So in that case, I still anticipate this figure to be higher because the previous data was 4%. And if we have a figure higher than 3.6%, which is likely possible, we could see Great Britain pound to gain some strength on that day and push to the upside. Then in the evening on Wednesday, one of the hottest news is the federal interest rate decision, which has to do with the Fed, okay? And it is related to the USD. To be honest with you, after we got the budget announcement by Biden last week, which was about a budget of $5.5 trillion, and they'll be selling bonds of $11 trillion in the market to be able to generate money. He also broke down some of the money in the budget to be used to buy real estate to stabilize the economy in the United States of America. He also mentioned about putting some money in security. He also mentioned about putting some money in different sectors of the United States of America to be able to help the people of the United States of America. And I noticed from one of the memos I read by Goldman Sachs that a lot of regional banks are going to close down in the United States of America because of there is a hyper inflation coming into the United States of America. But the big banks in the United States of America, like Goldman Sachs and American Express, they're going to be strong to be able to employ those that will be sacked by the regional banks when they close down. And in such cases, we're also seeing that the prices of inflation is increasing, one, and then layoffs are going on. Okay, layoffs are going on by companies that cannot be able to keep up with the inflation of products and services in the United States of America, which is there is high chances that the interest rate decision might be increased to 6% in the United States of America, because based on the memo that was read last week by the Federal Reserve Bank Paul Chairman, he says that if inflation rate increases one more time, there's high chances that the United States of America is going to increase if inflation rate increases one more time, there's high chances that the Federal Reserve of the United States of America is going to increase interest rates to be able to reduce inflation. Okay, so what they do mainly is that they increase interest rates so that interest rates can be able to reduce inflation. But since interest rate was pegged at 5.5% since last year, I think October, It was stable. Inflation was stable for some time, but right now inflation is not now picking up. Since inflation is picking up, the Fed has to take action, and the only way they can take action is by increasing interest rates. And if that happens this Wednesday, it's going to affect every other currency, starting from the Great Britain pound to the euro. By next month, they will all have to increase their interest rate as well. But let's see how this meeting plays out on Wednesday. Okay, I'll be on the sidelines. I need to confirm because I have a lot of insights based on the current situations of the United States of America. So after this interest rate is announced on Wednesday, then we'll be watching out for FOMC economic projection, then the Fed press. Okay, this is all happening by 7 p.m. West African time on Wednesday. Then to wrap up that day on Wednesday, we have Judo Bank Manufacturing PMI for AUD and Judo Bank Service PMI for AUD as well. If we have a figure higher than these two figures on the consensus, it's going to be good for the Australian dollar leading into Thursday. Then on Thursday, Asian session, we have balance of trade for Japanese yen, which has to do with the total imports minus total exports. If the imports are higher than the export, it's bad. But if the exports are higher than the import, it's good. And if you know the track record, Japan is like the central of e-commerce in the whole world. So most times export is always higher than imports. Okay, so in such a situation, if that happens, we will see a strength in the Japanese yen on Thursday. Then Asian session as well, we see Australian unemployment rate and employment changes. We're watching out for the unemployment rate because employment changes is a derivative of the unemployment rate. If you see a figure that is higher than 4%, it is bad for the Australian dollar. If you see a figure that is lower than the 4%, it is great for the Australian dollar. Then early in the morning London session, we have France service PMI, France manufacturing PMI, Germany service PMI, Germany's manufacturing PMI, which is quite very interesting. And then after that, we can be able to know that if we see a figure higher than the consensus, it is good for the euro. But if we see a figure lower than consensus, it is bad for euro. Then on Thursday as well, we have interest rate decision for CHF. Okay, and if we see a figure that is exactly as 1.75, it's going to weaken the CHF. Okay, so watching out for that on Thursday. Then to wrap up London session for Euro, we have manufacturing PMI for Euro Central, service PMI for Euro Central as well. And like you all know, if you see a figure higher than 47 and a figure higher than 50, it is good for Euro. But if you see a figure lower than 47 and a figure lower than 50.5, it is bad for Euro. The same with the Great Britain pound. We have manufacturing PMI, service PMI, and interest rate decision for Great Britain pound. Whoa! Wednesday interest rate decision for dollar is highly going to affect CHF and Bank of England interest rate decisions. And if the interest rate decision is kept unchanged, which is likely if dollar keeps their interest rate unchanged, but it is not likely if dollar changes their interest rate because every bank works together. It's more like a chain. They work together. They are connected together. This is a very highly volatile week. Highly volatile, and I love such week. This is where you can see price movement of 60 pips, 120 pips, 150 pips within a day. Quick box, okay? So on Thursday, we have Bank of England interest rate decisions. Then to wrap up Thursday, we have initial jobless claims for dollar, and we have global service PMI, global manufacturing PMI, existing home sales for the dollar. The most important one I'm watching out for is the initial jobless claims for the dollar. And for the past 3 weeks, we had negative initial jobless claims, but last week's data was positive for dollar. Let's see if this week can as well repeat a positive data for the United States of America initial jobless claims. So to wrap up the week on Friday, we have inflation rate year-over-year for Japan, early Asian session. On London session, we have retail sales month over month for Great Britain pound, retail sales year-over-year for Great Britain pound, retail sales X. This is all a derivative of retail sales month over month. So I'll be much more interested on retail sales month over month and retail sales year-over-year 8 a.m. London session. So if we see a figure higher than minus 0.3, it is good for the Great Britain pound. But if we see a figure lower than minus 0.3 or minus 0.8, it is bad for the Great Britain pound. As well as London session, we have IFO business climate, which has to do with what business owners in Germany see or anticipate for the future? Do they think the future is optimistic, which is positive, or do they think that the future is pessimistic, which is negative? So if you see a figure higher than 85.9, it is good for the European pair. But if you see a figure lower than 85.9, it is bad. But based on consensus against previous, we can see 85.9 is higher than 85.5, which is good for Euro diving into Friday. But when the data is out, then we can then anticipate either we're going to change our bias for a short. Then New York session, we have retail sales year over year for card, retail sales month over month. And the retail sales X auto month over month is a derivative of retail sales month over month. So if we see a figure higher than 2.5% for year over year, is good for card. And we see a figure higher than minus 0.4%, it is terrific for card. Thank you so much for watching to this point. If you want to learn more about how to trade, how you can be able to become a profitable trader, how you can get the right software, the right tool sets, the right mindset, the right guidance, and also be able to join our community of like-minded individuals who will support you, who will provide for you the right roadmap, which is going to enable you to be able to set up your trading targets and be able to achieve your trading targets. You can dive down to our seller store. The link is on the description. We have a monthly package, which is about $49. Then we have a 3 months package, which is about $139.65. We have a 6 months package, which is $264.05, and a year package of $470.03. Okay, so as soon as you make payment for this package, you will gain access to, after you have selected a package, either a year, a month, 3 months, 6 months, or 1 year, and you select your payment method, either bank transfer, debit card payment, or cryptocurrency, you gain access to, let's say for instance, 3 months intensive online bootcamp on our website, because we have an online platform. And I was taught forex trading 10 years ago from my mentor in Canada. I never saw him in person. He taught me through an online platform, and I am here today because I have learned this craft. I have been able to aim from this craft, and I have been able to build my life around this craft. I'm offering the same opportunity to you to aim as I have done through learning from our online bootcamp. You also have a guest trainer coming in from London and one from United States of America, New York, who will be taking you on this training as well. The cost of me getting them is about $460. Then we have some forex software files and indicators we'll be sharing with you. You can use on your charts to be able to place trades and make profits, apply proper risk management, and also set signals for yourself. Then you can be able to have access to our VIP signals. Once you join our Telegram, the link on the Telegram is on the description. That's the free channel. But if you join our platform, you get access to the VIP. I can't place any value on this. Then you have free membership into our VIP group. You have one-on-one session with me. If you have any questions when you're learning, you take down your questions, you ask me, and I'll be able to break it down for you as I'm breaking it down for a 5-year-old boy. You get access to our textbook as well, Forex Mastery, Guide to Trading Success, a certificate when you're done and you've passed the test, and a 5,000 evaluation account from a prop firm if you pass the test, okay? With that said, thank you so much for watching to this point. I wish you a profitable trading week.